I feel like I'm super red.
I don't see that. It's just got to be your eyeballs because you don't. Well, but you're also comparing. I'm a white girl. So if you're looking at your skin color to mine.
Wait, you're white?
I'm a white lady.
What? Well, we're recording so we can kick us off.
Okay.
WoMann. W-O-man. WoMann. W-O-man.
Okay, so we're on round 2, and I'm excited. I'm Deborah Criddle, and I'm with my
Mark
buddy.
Jones. What up, y'all?
All right, so last week I had a realtor friend send me a YouTube link to a gentleman by the name of Mortgage Ninja. And I don't really get into a lot of these things. And there's a couple of reasons why. Some of it is because I'm like doomsday psycho. So if I get too involved in people's opinions, then it's like, we're moving to the bunkers. Everybody.
I was just talking to Kristen last night because we had watched that movie on Netflix that the Obamas came out with. What is it called? Leave the World Behind or Leave This Out of This World, something like that. But it's basically a cyber attack. And I turned to Kristen and I was like, I think we should start investing in a bunker.
Oh, yeah, I will not be watching that video. I will not. Because
you would freak out.
Yeah, I have my own feelings of what's going to happen with the zombie apocalypse crap, but I have to be cautious because it's like, oh my gosh, we're never going to close another mortgage loan again. And oh my gosh, the government is. And so I just
tune out the noise.
Stay in my space. Anyways, but it was interesting because I was asked about my opinion on this and I listened to it a couple of times and I'm thinking, what am I missing? So the whole thing about it was that Freddie Mac had rolled out just standardizing some documents when it comes to down payment assistance programs. And I remember seeing this article, looking at it thinking, well, that's kind of cool. Like they're going to get in sync with everything. Okay, that's cool. But what was crazy is the mortgage ninja was like, this isn't good. And this isn't good at all. Okay, so first off, I want to know how you feel about that, Mark. Like,
well, I mean, I guess you really don't know at the time that it is going to be an issue because we're the ones originating the loans. I don't offer loans to people that I don't believe deserve it, especially when it comes to down payment assistance. And that's predominantly what we're going to be talking about today here, folks, is down payment assistance and the forms that Freddie Mac is coming out with that is supposed to make it easier or more clear for a customer, right? And I don't know, anytime that they add more red tape, it tends to make things more difficult for customers, kind of like TRID when they rolled out the new closing disclosure versus the HUD. In my opinion, it was even harder for the consumer to understand and comprehend. So who knows?
Yeah, there were a few pieces on those forms that got taken away, the APR and finance charges and things that were so clear on the truth in lending. But, right. Anytime there's going to be some sort of new disclosure, new requirement, new something, just kind of hope that they've done their due diligence to not lose what we needed and make sure we've had a positive gain. But what was crazy is I dove in just a little bit and he talked about how in trouble Freddie Mac is.
Yeah.
And I thought, wow, okay. So real quick, Freddie Mac, Fannie Mae, FHA, USDA, VA, they're like the big dogs that basically dictate our lives when it comes to mortgage loans.
Basically.
So Freddie and Fannie in my little world are brother and sister kind of thing when it comes to the loan programs. They have some differences between each one of them, but they're just a part of the loan process that we sell to on the professional side.
And they're not regulatory enforcement or anything like that, but I do believe they've got a pretty solid grasp on being able to enforce change, if that makes sense.
Yeah. They got a big enough voice that if they're
we tend to do things to protect them more than anything. If that,
yeah. Well, my first mindset when I went to this is thinking, well, Freddie's a piece of our life here. We better find out what's going on. So I dove in and just wanted to know where they were at. And Freddie Mac had in August sold up $628 million worth of loans. And then again in October, sold another chunk. And that sounds like a lot of money. It really does sound like a lot of money. But if you take that and calculate it into how many loans it was, I think it worked out to be like 33 or 35 loans or something. I can't remember what it was. And then in October, when they sold again, it was 88 loans and it was about 19 million. So to me, who works in those numbers all the time, I'm like, that's really not that a lot. That's really not a lot. But then I wanted to know how many mortgage loans were out there in the market right now. There are 84 million mortgages.
Yeah.
So we're talking about 125-ish loans that have been sold because they're going bad.
Right.
The 84 million.
It's the ratio doesn't add up. I mean, it's like earlier today I did a podcast to where we were talking about the doom and gloom of the articles that are being published. One of which was 45% of realtors can't pay their rent. Yeah, but 55% of them can.
Yeah.
You know? So I think that when dealing with articles, headlines, things of that nature, you have to put them into perspective to get the full grasp of the truth. Because there's his story, her story, and then the truth in the middle. And based on what this article is saying, and I don't even know if this article says that it all has to do with down payment assistance type loans.
Have nothing to do with it.
Right.
And when I dove in a little bit further, there was very few that had the tie to the down payment assistance.
Right. So, I mean,
I'm confused how we were pulling in this as Freddie's going out and we've got this
as the reason why they're adding additional hoops or layers or forms in this case.
Yeah.
To the process. Now, question, do you guys do down payment assistance loans up there in Idaho?
Yeah, we have seriously, I think we have the best program in the state of Idaho.
So tell me about that program, because I know in the past I worked on adding those programs to review my mortgage in the database, and there were quite a few of them. And to be honest, they were very nuanced. And you had told me that up front. You were like, they're a little tricky. But how the heck do those work? Because ours here in Texas are pretty straightforward. We've got plenty of them per county, per state and city, but each of them are based on the amount of funds that you're going to get dictates your interest rate. And then obviously there's guidelines, minimum credit score, repayable, some of them forgivable, some of them grants, etc.
Yeah. We have, they kind of change periodically. Sometimes they throw a heroes program at us. It's like nurses, teachers, those kind of things, first responders. Then they have just the standard. If you make under this much money, you can go on this program. If you make over this much money, you go on this program. But it really just comes down to if we need an FHA loan or if we need a conventional loan, then you have to pony up 0.5% of the purchase price, and the rest of it can be financed in. And the down payment assistance falls as a second mortgage. So it's just 2% higher on the second mortgage rate than what you've locked your first mortgage rate at. And then it's amortized over 15 years. So it's like a $10,000 loan at 9% ish.
Repayable?
Yeah.
Okay, gotcha. Yeah.
They're all repayable. And that's the one thing that he brought in is there was a lot of confusion with down payment assistance programs. And I dove into our other program that we have because we have our state of Idaho one. Okay. We have our Man one that we have that doesn't have income maxes and things like that.
Yeah, Manny 100. Really, really like it.
It is a really good program, but I've never closed one because my Idaho program just kicks it out. Like it's awesome. But I even looked at the program on that one. I'm like, it's really not that confusing. Right. It's either forgivable over a certain period of time or you pay a monthly payment on it. Like
exactly correct.
There's not a confusion here. So that made me a little bit more confused. But this is where it got crazy is as we're talking about Freddie standardizing documents and trying to get their hands involved with what the heck is going on because they've got sold this huge bulk of loans that there were crappy ones inside of it that who knows what the thought process was. If we just shove these 10 terrible ones in, maybe they won't figure it out and they'll just buy the whole book. That happened, I'm sure. But it comes down to bad apples, right?
Absolutely. And I think that can be compared to any industry, any anything, to be honest. There's going to be bad apples, whether you're dealing with a sports team, you're dealing with the grocery store clerks. It just doesn't matter. You're always going to have those people that are not above par. That's what we'll call it.
Yeah. Yeah.
A couple eggs short of a dozen.
In your opinion, when you heard that Freddie Mac was going to roll out these standardized documents and everybody's following suit, Freddie headed it, from what I could see. Freddie headed it, and then here comes FHA and Fannie and everybody behind them to standardize this, to get a grasp of what's going on. What do you think?
So I read this. Let me see if I can put this on the screen for us. Stop sharing here and present and share screen. And we're going to go with Freddie share. And then I should be able to have that. Okay, so when I read this, I was still unclear as to what they're actually going to be adding. And additionally, like you said in the beginning, how is it unclear? They're being explained by their loan officer, hopefully, what the terms are, what the situation is. And let's say the loan officer is not doing that. They still have to sign disclosures up front. They then sign more disclosures before closing, and then more disclosures at closing. And those are documents that I do know that the title company tends to stop and go over just real quick to make sure that they understand. I don't know. I think it's smoke and mirrors, to be honest.
Yeah. Yeah. It's like there's an ulterior motive, but is it a bad ulterior motive? We don't know. Like, I read that article that you've got up on the screen, and it sounds good, but we can all sell anything. Anybody can sell anything with the right words. And you can, it's just like, if you want to find out if a medicine's good for you, you Google, is this good for me? And you'll find it's good for you. Is this medicine bad for me? You're going to find the articles that say it's bad for you. So it's all in how you ask the question, but it'll be interesting to see how this rolls out. I do see that Texas is not on the list. It's not the first 19, but Idaho is. Yeah.
Yep. But so Texas, you'll be dealing with this before I do.
Well, the one thing about Texas has some pretty strict regulations on things already.
That's what I was going to say. We're pretty, and I don't want to say we're heavily regulated, but we do a lot of things that make sense. Protecting the consumer is top priority for a lot of things, especially when it comes to the down payment assistance programs. In every single case, minus maybe a few, and I'm saying out of the, let's say 10 that we offer, there's 2 or 3 that you don't have to take a home buyer's education course to get them. But let's say the 7 or 8 you do, and the buyer has to go through this course where they learn how to budget. They learn what kind of down payment assistance that they're going to get themselves into, what the repayment options are, et cetera, et cetera. And that's mandatory. So I don't know what type of form would be more clear than what is already done, but hey, I'm open to it. At the end of the day, I don't think it would halt our process. I don't think it would, back up the truck and dump the load. We can take it, bring it on, because we still have to do what we need to do. So in regards to down payment assistance, if we could shift for a moment, what are your thoughts on down payment assistance in today's market?
Man, it's like devil on one shoulder, angel on the other, because I get frustrated.
Did your camera just move? That was super cool. Whatever it was. Sorry, go ahead.
So, devil on one side, angel on the other is you've got people that are just doing their best to make ends meet. They can make their mortgage payment / rent payment, whatever it is. They just don't have a lot of extra to stash money.
Yeah.
Down payment. And it's funny because you probably see these posts that are like, oh, if you don't go to Starbucks, you're going to save yourself $2,000 a year. You're right. You could do those kind of things. And I think that's great. But you also have to live, because you could get hit by a bus tomorrow. So you also have to live a little bit, but you can pull some things out to stash some money. But then you also have people that they're just straight up not smart with their money. They go out to eat for 3 meals a day. They get pop and coffees 3 or 4 times a day. They don't budget when they go to the grocery store and like meal plan. There's those little things that keep you good. Like you're financially in a better spot if you're cooking meals from home and you're doing some of these little things. But I think
I'll add to this. So in our market, and I have come to find that folks in the northern part of the United States tend to have higher credit scores, tend to have higher income streams, average income household wise. I'm down here in the South where average credit score is 660. Average household income is right around the $50,000-$60,000 mark. And with inflation, and let's say you take all the eating out off of the table, you've still got a void that needs to be filled with those that cannot save money. I, being a branch manager, have not always been an advocate for down payment assistance. And being honest, the branch makes less on those types of loans. But even more so, it was more when I saw folks that had money in the bank trying to take advantage of the funds for down payment assistance. And in those cases, I highlight very clearly and educate the loan officers, make sure you show them the difference amortization wise in what rate they're going to get with this down payment assistance versus the rate they're going to get if they go without it. And that tends to resonate quite a bit, but we still have quite a few people that are in need of that down payment assistance. And it's not that they have bad credit. It's not that they don't have a good job or job history. It's that CIA, credit, income, assets. The assets piece is kind of missing. And it's almost to the point where these people are going to live paycheck to paycheck. Is it wrong for them to purchase a home, or should they continue to rent? Because regardless, they're going to have to pay rent or mortgage. It's just if something if something happens, they're not going to get kicked out of their home if they miss one payment, or late on a payment. Same with renting, but at least they're building equity into something.
Yeah.
At least after a certain period of time, they're able to use that equity, leverage over. Maybe they get a windfall of funds. Maybe they increase their income as a whole, versus rent. They're at the mercy of the landlord. If they want to raise their rent next year, they can, and you got to just deal with it. So I used to not be a huge advocate for down payment assistance, but recently, especially in today's market, being that rates are high, and most of the buyers that we're seeing are those that could not buy in the last 3 years. They're becoming very popular. And like I said before, the Manny 100, we have a kind of a pseudo branch in Florida, but it's not a brick and mortar. So we're not able to originate down payment assistance loans. That Manny 100 comes in very handy, very handy.
Yeah. Well, and I think it's on us as a loan officer position to educate our clients in regards to, if you're living paycheck to paycheck and you're analyzing your deposits every month and you're looking at your daily average balances in your bank accounts, sure, you have those tight sections of the month that you only have $50 in your bank account, but it never goes into the negative.
Right.
You're managing your money. It may be tight, but you're managing your money, and you've got a $1,200 rent payment coming out on that, and you're doing okay. And then you have those other ones that they just live in the negative. There's a huge difference between running at zero and running at negative. And even if it's $5 in the negative, it's just those are the ones that, I'm not saying they don't deserve down payment assistance. I'm just saying it's on us to educate them.
I have to agree.
Don't sit in the negative. That's not good, because your house payment bounces. That's not pretty. So,
well, now you're talking about something that I want to get your opinion on, and we talked about it before in a previous discussion, and it has to do with our level of expertise, our level of advisory, our fiduciary responsibility as a loan officer that's reviewing their credit, their income, their assets, all of these things. is it within our scope or within our ability to advise the consumer based on what we see on bank statements and things of that nature to help them save, to come up with a budget, to review their finances as a whole, et cetera? Or is that something that we should stay out of and continue down the road of just offering mortgage loans to the consumers?
Oh boy. Oh boy. Do you see my props?
Yes.
It's my soap and my box.
Your soapbox. That's so clever.
Yeah, that's all I have. I don't own, a box of soap. So I'm like, what am I going to do?
Ladies and gentlemen, that's what we call a Mormon funny right there.
So it's interesting you brought this up because I feel like what role do I have in their financial plan is to not set them up for failure. And my favorite time of year is parallelogram season memes that come out, with tax season. It's my favorite. Like, that's what I look for. Everybody to blow up on social media is people are not educated when they come out of school to even understand how basic things just work in most cases. And so you have to rely on the professionals to say, hey, you know what? Even though we qualify you off gross income and my system shows you qualify for $3,000 a month, you don't live on net income. You don't live on gross income. You live on net income, which means it's $2,000 less per month. What are you comfortable with? Where do you feel like you can just allocate money towards a housing payment and not have it just totally make you house poor? And we have to ask those questions. And when it comes down to analyzing bank statements, it's very clear. I don't care where you spend your money. I don't care if you're at the bar. I don't care if you're getting your nails done every day. I don't care if you're going shopping. All I care about is at the end of the day, does that account stay in the positive? Mm-hmm. I don't care how you spend your money. I just want to make sure that you are only spending money that you have. And in the event that we have bank statements, and we see them a lot that hit the insufficient funds, periodically you have people that are, my check was supposed to go in on Friday and my auto deposit or my auto withdrawal for my car insurance came out the day before and it threw it in the hole. Those weird things just happen based off of payroll dates and things like that. But I just
agree.
Swipe my debit card, swipe, and whatever. Hopefully it works out. And that's on us. We have to educate. We have to bring it to their attention and say, hey, just as a little word of advice.
If we don't, who will?
Yeah.
And how many times that did y'all ever have to provide a budget letter when you qualified somebody over 50% back-end ratio back in the day? Do you remember that?
Yeah.
I loved that because
that says everything's wonderful in their life and how they're going to make this.
And here's the extra money that we can't count because our son makes it, but we're going to garnish that too. No, yeah. But I liked when we did that simply because it made us bring that concept to the forefront with the borrower. And they'd ask, well, why are we doing this? Well, let's see here, because your income and what you're spending is over this amount. When it gets to that amount, it's like, okay, we need to kind of tread lightly here and make sure that we're not issuing bad loans. And that concept is something that I think should be brought back into our process just because we're dealing with higher interest rates. We're dealing with some improper expectations of the past 3 years and what buyers think that they can buy versus what they actually can buy. But how many times do we push an FHA loan above 50% these days? Especially in the last several months, it's like, we know that they qualify. We can't use all their income or whatever the reason may be. Most Americans will tend to pay their mortgage first when they have tough times. It's just one of those things that's already been proven. I don't know, kind of going back to this article about the default loans in comparison to what, like you were saying, there's so many of them out there. If that's that small percentage, was that going to happen regardless of anything? You know what I mean?
Well, bad things always happen. It doesn't matter how much you prepare. There's always death. There's always accidents. There's always a loss of a wage earner. There's divorce. There's loss of children that throw you mentally in the wrong direction and you're just mentally can't even survive.
Yeah.
It doesn't matter how good the economy is or what interest rate you have. When crap happens, you just go into survival mode, and who cares what you lose, because you just mentally can't keep up. So yeah, you're always going to have foreclosures. And then you have bad things that happen to good people. You'll always have stupid people that will just never get their crap together. I mean, that's just always going to be what it is. And no matter what advice we give them, they're just like, good luck, kids.
I just came up with a new saying, and I get to use my little bleep feature on the next one. You're going to hear it the first time, but when shit hits the fan, just hope that you're not in that same room.
Yeah.
And what I mean by that is preparing yourself the right way, because like you said, it's going to happen. It's not a matter of if, it's when it happens. When those things happen. Yeah. And what is it? What magnitude is it going to be? But I think even with these down payment assistance loans that have gone bad, 628 million, how many of them actually have equity in them? Because I would go as far as to say that more than likely most of them do, even with down payment assistance, adding a second lien to it, etc. I've had a borrower that purchased a year ago, veteran, 100% financed the fund, the guarantee fee, all of that, the funding fee, and just recently sold their home, made money, and are now purchasing again with the proceeds of it. So that just kind of goes to show that the last 3 years wasn't that bad of a experience for homeowners and those who actually got into to homeownership during that time, because you've got some equity.
Yeah, and I do think that if there isn't a lot of equity, there's enough that those that are taking those loans back, they're not taking the losses like they were in 08.
Right.
Some of those losses in 08, it was a couple $100,000.
I guess that can be maybe the last thing that we talk about, because I was not in the business in 2008, and I know you were. You were probably what, like 18 then?
I wasn't pretty close.
what was that like? I guess in a summed up explanation, because you mentioned it was kind of like 08. I wasn't in it. I was in banking at the time, but I wasn't selling mortgages.
Yeah, do you know the crazy thing about that? And this is in one of his comments that the mortgage he said, and then I'll tie this all back together. He compared down payment assistance to pay option arms. Are you familiar with what a pay option arm is?
No, I mean, I do know, but go ahead and explain.
Oh boy. So I have my opinion of them, but pay option arms and down payment assistance are night and day different. Down payment assistance, like you have an extra $100 a month, you're paying this loan back. Pay option arms were, well, you could amortize it over 15 years. You could amortize it over 30 years. You could pay an interest only. You could pay less than an interest only payment. And every month you could decide. It wasn't at the time of closing. It's like, well, today I feel like I have enough money. I'm going to go ahead and pay this $3,500 payment, because if I pay that $3,500 payment, I'll have my house paid off in 15 years. I could pay it this month. Oh, next month. Oh, well, I'm running a little bit short. So I'm actually going to pay less than what the interest is owed on it. And I'm going to pay it that way this month.
So that's what they called pick a pay.
Something like that. Yeah. I don't know. And it was an adjustable rate. So on top of the fact that you could pick all those payments, then you have an adjustable rate behind that. And then that and stated
potentially a balloon, huh?
It wasn't a balloon.
Okay.
Well, I guess it could have been looked at that way, but it was not good. So you have these loans that before the crash happened, they were already going into a negative amortization.
Right.
And so I don't agree that down payment assistance and pay option arms are even somewhat close. There were some bad programs, stated income loans. I remember this lady we did a loan for. She worked at McDonald's. I don't remember how much she made, but she was just like a starter position at McDonald's. So nothing significant. And she needed to buy a house, and her and all of her girlfriends were going to buy this house together. So, but we couldn't put them all on the loan for whatever reason, credit scores or whatever. So I just remember at the time, the loan officer was like, oh, we'll just do stated income, 100% financing, stated income. We had to state like $4,000 a month in income for her to qualify on this, but it was okay because the girlfriends were all going to move in. Yeah. Until the girlfriend fight, women all together is not a good thing. And
no, I've heard
women together, not okay. But, so that So in answer to your question, what went on that day when the crash officially happened, I was in the subprime side of things.
Okay.
We were in the more risky loans. And we walked into the office one day and we were just getting loans ready to fund and, hey, just doing what you normally do, making sure income's there or employment's still there and all that. And then we would get notified, hey, so-and-so just filed bankruptcy. Okay. So the 5 loans we had funding that day, we had to hurry and shuffle them over to a different investor really quick, hurried and got them all packaged up and sent them out. And by the end of the day, that company had closed.
Wow.
And within just a short window of time, like I'm talking a couple of hours to a 24 to 48 hour window, all those loans were dead.
Yeah.
The whole industry had just crashed. And it was crazy. And then everybody just went into panic mode. I mean, everybody ran to their bunkers and freaked out. And I don't think that the income levels were there to support some of the chaos that was going on. And
most definitely. Yeah.
Definitely loans that should not have been written.
And that's why I believe that when you hear fear mongrelers, that's a tough one, expressing how they see another 2008 or another crash taking place, I think there's one massive piece that they're missing or leaving out conveniently, and that's the fraud aspect of things. We're not seeing that in everybody that we have pre-qualified and closed on a loan. Not only went through scrutiny, but it wasn't an easy check your pulse, check your credit score type situation. Default rate very, very low. I haven't seen anything that alludes to increase in foreclosures. I mean, right after the pandemic, we when all those mortgage forbearances started coming due, there was a lot of headlines about foreclosures are increasing 1,000%. Well, yeah, if there were none before, that's how it gets to 1,000, because there's only 100% of something, you know?
Yeah.
But do you foresee any traces of a 2008 coming about?
No. And I think that there is definitely going to be, we've already seen a correction a little bit.
Yeah. Same.
Some of the prices have leveled. Some of the prices have come down. I look at it and I think, I don't think the prices should have been where they were in the first place. So it's okay for it to come down 5 or 10,000, but I just don't see that. And I'm with you. I've jumped on a couple of articles and thought, okay, are we headed down that path? But living that life? No, we are nowhere near that. And the thing that people don't even realize unless you're in the mortgage industry, the clients that we work with think they've just had their freaking blood taken by the time they get done because there's just so much, and they have no idea the checks and balances we have going on behind the scenes.
Right. And we're talking, those are traditional loans, FHA, conventional loans, USDA. Then you add down payment assistance, anything to that, and we scrutinize even more.
Yeah. There's just not the people just, can you sign your name? Yep. Then you can have this $200,000 loan. No, you got to be able to sign your name and perform a lot of paperwork, produce a lot of paperwork. It's just, and it would be interesting to talk to somebody who has been in the industry as long as I have about that and have them have a different feeling than I do.
Sure.
To learn that.
It'd be odd.
I just don't know that if you've gone through that 2008, I just don't think I have a differing opinion. I think the most of us that went through that are like, yeah, it's definitely different. And the one article I read, it was, there's just so much more money out there. People have more money in savings. I don't even think that has anything to do with it. I just think the right people are getting the loans, and the ones that are going to be in trouble are the ones that just had bad things happen to good people.
Unfortunate situations.
Yeah. And you're always going to have that, whether you had $200,000 down and $400,000 or not, you still have those unforeseen circumstances.
Right. So verdict, Freddie Mac setting the bar, creating new forms for us. Everybody else more than likely going to follow suit, good or bad, or indifferent.
I just really think that anytime you standardize anything, it just keeps the good apples good and the bad apples have to either comply or they get kicked out. And
Yeah.
and whoever's watching this, if you want to dive in and go a little bit deeper into this, you're going to find how much fraud and how much bad people in the market unfortunately forced a hand to regulate one more thing. So you get fraud involved and thumbs are going to get put on people because
I agree. I do agree. Well, I will make sure to put the links to both of these articles, and matter of fact, I'll plug the Mortgage Ninjas videos. I don't always agree with him, but he is out there. He's consistent. If you don't follow him, maybe follow him so that you have an additional opinion that you can provide your own brain power to come up with your own opinion. I think that was another good one, huh?
Yeah.
We're getting good at this. 2 in and we're pros.
Yeah.
Well, you got anything else?
Nope. I think we're good.
Hey, Deborah, you're awesome.
Oh, one thing we should preface, right? We got told Deborah is not the brains of Man Mortgage.
Oh, she had to clarify.
Deborah is the brains of Man Mortgage in Idaho Falls. So, hell to the no. I do not want anything to do with the brains of all of Man Mortgage. Just my little branch.
Kind of like becoming the president.
Yeah, I do need that job though.
And here we are again. I love it.
All right, no, we're good. We're good. We're going to watch these standardized docs come out and hope that the right people are making the decisions and we can just have one more thing that helps our consumers.
Absolutely. Well,
and you're awesome, Mark.
You are awesome. You know what? We are awesome.
We are awesome. Okay.
Everything is awesome.